Hello everyone, this is Stock Market Daily and thank you for joining me today. It is February 6th, 2023. As always, this is not financial advice. Please don't copy my trading strategies because you will lose money. This is only for educational purposes. So let's get into it. As you could see, we opened up the day lower, the morning lower from the Friday close. The gap did not fill in the morning and it actually started selling off right away. Now, what I do on Mondays, as I've discussed before, I always sell my covered calls for the week, on my weeklies usually. Today was 3 Tesla calls. One was a 220, the other two were 232.50. Collected $212 on one and $118 in the other. Then we have a Roblox cover call and a PayPal cover call. So let's get into the actual SPX trade right here. As you can see, I sold 3 puts in a row. Then I moved to the calls. And if we look at the ladder, you'll see that looks like this basically. So I sold 1, 2, and 3, and I moved on to the calls. If we compare that to the chart, you'll see that I was kind of selling into the weakness. And I like doing that sometimes because it actually pays more. So as the SPX is moving down, I do see that it's not moving down with a lot of force. And I am not very nervous about selling those puts. Obviously, my opinion doesn't matter. The market can do whatever it wants. But I thought it was safe to do so because it seemed like we're going down, but we're not going down with a lot of force. Until obviously this happened right here. And at this point, all of that didn't matter because we started going down pretty rapidly and started hitting new lows. In fact, the one of the puts was in the money at this point right here. So I did sell the calls and I collected a little bit of premium here. However, as the market recovered and as we were going back up, I did want to sell an additional call, but I was only able to collect, on this one, I was only able to collect $200. And on this one, I was able to collect $105. And even though I tried to get in here somewhere or like some this area, the premium at this point was already very, very low. And one thing I do want to mention about premium when it's that low, it was like 30, 40, 50, even $60, $70, doesn't matter. Those are very low premiums for me. You have to keep in mind that it might seem like it's easy money, like you could get the $50 or the 60 or $70 very fast, easy, and this may never hit your it may never even reach this level right here if we're like somewhere right here how we were. But 2 things are happening. If for some reason the market does turn around and it's going to go against you, that very small premium is going to double, triple, quadruple very, very fast, especially if it's like a fast rebound, how it potentially could have been happening here. So that has 2 things going on. If that's going to happen, right? So if it's going to start recovering this premium that let's say was $60 right here, it was $60 right here, and now it's worth 80, 120, the 180 very fast within like 10, 15 minutes, then your psychology as a trader, you're going to be watching that and you're going to be very discouraged. It's very difficult to see that happen from time to time again. Number 2, and that is these premiums at such low levels are not going to decay throughout the day. So if it's 30, 40, $50 in the morning, and even though the market is either moving sideways, basically kind of staying pinned at the same level, or even going down slightly, then that premium is going to stay around the same level and is going to, even if you need to get out of that position, you're going to say, well, what am I doing this for? I'm only made like 5, maybe $10 at the most, including fees. It doesn't really make sense to potentially lose a lot of money. So unless the premium is like, I don't know, $100, I wouldn't get into the position, even if it seems like it's easy money, because it could really easily turn around and go against you, and you're going to just, deal with all the things I just mentioned. So unfortunately, I only sold two calls here, and it never really materialize for me for the rest of the day. So at the end of the day, we had this little drop right here, and I was looking at my flex grid here, and I was looking at Apple, which was very strong during the day and started declining. And right here, it broke through the support and started declining, and so did the rest of the market. It hit this level of support right here and bounced back, and on the first level of support on this green candle, I essentially sold this 4095 put, and that is right here, and I sold it at 334, and I paid $65 for that. It could have, I did not expect this to be going up that much after it hit this level right here somewhere. It could have very easily continued down, so I was very happy to get out of that for $65 only. The rest of the market kind of, the Microsoft was actually pretty good with Apple compared to Apple. Alphabet was good too. Amazon and Berkshire, if we zoom out, they were also kind of lingering in the same area. They didn't really move, but they were not as strong as Apple was in the morning. So I was just pretty much looking at this, and the market, I believe, was following Apple itself. So for the day, what I ended up getting was a total of $1,877 with all of these trades right here. That was 1,877. However, just on the SPX minus this put, it was 1,360. So very good day. Definitely can't complain about that. The point is to end all of your trades in cash every single day, and to come back tomorrow and do the same thing over again. So that's it for today. Thanks guys for watching. If you like the content, please consider subscribing, like the video, and I make these every day. We'll see you guys tomorrow. Thanks. Bye-bye.